Or any questions you might have, feel free to shoot them out into the chat throughout the whole session. Don't know how long this is going to go. I do have a brief kind of overview, but we're just going to go through all of the points, and I'm basically going to be breaking down how I trade the 15-minute opening range breakout, how it's different than what some other people trade, the different ways that I do trade it, and how I mix it with ICT concepts to basically take the most precise entries with the highest probability setups. Right, so we're going to be going through entry models that I use with it. We're going to be going through different confluences, our higher time frame levels that we're looking to take trades off of, where to target, risk management, all that good stuff. So yeah, guys, if you want to pull this up on the side, I have the PDF that I will shoot over to you guys in the chat right now. If you want to kind of just go through the PDF of the 15-minute orb as I'm talking. I'm sending it right now to the chat so you can download that. But yeah, like I recommended, take out a notebook and we're going to get started. So we're going to be going back and forth kind of between this and between the charts. I'm going to be breaking down actual technical analysis levels while going through the details. So what is the 15-minute orb? I'm sure everybody that's here has probably seen my videos, whether it's through social media, whether it's through the Discord, whether you're already live trading with me. And the 15-minute orb, it's simple when you break it down. It's the first 15-minute candle of the New York AM session. So that candle opens at 9:30 a.m. New York time or Eastern time, and it closes at 9:45. And the reason that this candle is so important, guys, is we see it set up the structure for the entire day. If you go back and you back test and you look through days and weeks and months of the 15-minute orb, you're going to see how it sets up the structure for almost every single trading day. While there's always going to be those days where it might not play out, right? Because no strategy is ever going to be 100%. That is why we have to combine it with other strategies and our overall market confluence to be able to take better entries on it, right? So I've seen in my comments, right? I don't pay much attention to my comments on social media, but so many people are like, I just looked at it and it didn't work. It didn't work this day. It didn't work this day. That's because people are not actually using it how they should. People just look at the overall 15-minute orb and they look and see, okay, well, we broke out and then we came back down. You have to have the bigger picture. You have to, and that's why I'm running the session today. That's why I'm going to give you all of the sauce, right? I'm basically going to be breaking down every possible thing I can and giving you the whole strategy for free. So I'll start off with that. It is a very, very, very important range. So typically what I'm looking to do on all of my 15-minute orb breakout trades are I want to at least have a 1 to 2 RR or risk to reward. That's typically my minimum RR. Yes, sir, it is. I am recording it for you guys. I'll post this after. So yeah, I'm typically targeting a 1 to 2 risk to reward. Now there's going to be trades, and there's going to be one I go over today. During my live trading session today, we actually caught a 15-minute orb trade for about 400 ticks with about 60 ticks of risk. So that was more, I forget exactly what that RR is, but it was over a 1 to 4 risk to reward. So there's going to be opportunities for us to catch bigger trades, but at a minimum, I'm typically looking for a 1 to 2. So again, I kind of talked about this already, but identifying the opening range, right? How are we going to do this? Well, let's go to the charts. And I'm going to use kind of the replay tool right now so we can go back and have a kind of clear idea. But I'm going to go over today's opening range. And what we're going to do here is on the very, very, very first candle of the day. Remember, 9:30 a.m. New York time. And this is on NQ, by the way, guys. NQ, just the NQ 100 E-mini futures chart. So if you want to follow along. The very first thing I'm going to do is I'm going to grab my trend line tool. And I'm going to chart out the high of that candle. So that's going to be my 15-minute orb high. And I do ORBH, right? Orb high. And then I'm going to be charting out the 15-minute orb low. That's the very, very first thing that I want to do when it comes to the 15-minute opening range candle. Now, there's a lot more to this because before this, we're going through our pre-market checklist. We're going through all of our higher time frame levels. For now, we're going to start simple. We're just going to chart this out. This is the very first thing we want to do just to make it easy, right? And this now becomes our range. So if we are expecting a breakout, let's say a breakout to the upside, right, we're looking for something like a break and a retest of that orb high for a continuation. This is the way that most people trade it. Most people are looking for a break and retest, which is similar to the way I trade it, but there's a lot more in detail to it. Because a lot of the time when you try to trade it like this, you get caught up in some manipulation moves, you don't get very good entries, and you end up missing out on the actual move. But that is the way that most people typically trade it. Another way that people will trade this strategy is they'll use their fib, and I also use my Fibonacci retracement, but you want to be looking at the 50% level of this range. So some people will use that 50% touch point for entries as well, right? Some people will use the orb high for a touch point, the orb low for a touch point, and the 50%. And this is all great. I'm not hating on anything, the way that other people trade, because I know other people like to use the 15-minute orb in this way. But what I found when I was testing out how to trade this 15-minute orb is that when I purely tried to trade it off of just a break and retest or just a test of the 50%, I did not see much of a high win rate at all. I saw way more losses than wins. And since I already am an ICT trader, I realized, okay, hold up. Maybe if I combine my ICT concepts with the orb, I can actually have a really good high win rate strategy, which is what I ended up finding, right? I ended up backtesting it, and I ended up starting to trade it very consistently. So that is kind of the way that most people trade it. They'll look for a break and retest. They'll look for a sweep of the high back down. But that just doesn't give us enough insight into how to actually take precise entries. So now what we're going to do is talk about, okay, well, how do we know where the market is going, first of all? Because without understanding our full market structure on the higher time frames, how are we supposed to catch a 15-minute opening range breakout? Because for an example like today, we ended up, and I'll show you here in just a second, but a lot of people might have taken this opening range breakout long, right? Because they thought, well, we have a strong up close candle on the 15-minute, we've broken out, and we're going to retest and go long. That's what I bet you a lot of people took that trade today. And here's why we didn't take the trade, because we had a fuller understanding of what the market looked, or where the market wanted to go. So when I did my pre-market analysis yesterday, what I noticed, first of all, was on the weekly time frame, we swept our previous week high right here. Okay, so after we swept that previous week high, we also traded into a weekly bearish order block with this up close candle. Okay, that's just one thing. That's not enough for us to have a full trade, right? So now we go down to the daily time frame. Okay, so now we swept previous day high, previous week high. We traded into a bearish order block here on the daily time frame. See these two up close candles? That's a bearish order block. We also have a bearish daily fair value gap. We reacted off of that level. Okay, and another thing that we want to notice is that we have a bullish fair value gap on the daily time frame below, which is a very good level to see price retrace to down here. So this is exactly what I talked about in my charting session last night, and we talked about this in our pre-market analysis this morning. And it also goes along with our weekly profile. I'm expecting bullish expansion this week. So on a Monday with no news, we're probably not going to see that expansion to the upside, especially because we're hitting a bunch of higher time frame bearish PD arrays. So I want to see Monday be a retracement day after having a big expansion last week. I want to see a trade into a higher time frame bullish PD array, like this daily bullish fair value gap or busy. And then I want to see Tuesday expand. Okay, so now I have all of this in my head. I have all these levels. I even went down to the 4-hour time frame. I noticed that we traded into a 4-hour bearish order block up here, a 4-hour bearish fair value gap. We go down to the hourly time frame. Okay, even more. We have an hourly bearish fair value gap over here and an hourly bearish order block. So all of these higher time frame levels, now I have the bigger picture. I don't think that we're going to expand because, first of all, I'm paying attention to our news. News is the very first step that we need to learn to become profitable traders. If you're not paying attention to news, you're going to miss out on a lot of very important moves in the market. I knew that today was no red folder. I knew that it was a Monday, so I'm expecting price to come back down and rebalance an expansion move from last week, okay? So that's the whole bigger picture. That's how I got my bearish bias for today's trade. And that is what you have to do every single day. You got to go through the pre-market checklist, right? Are we delivering from a higher time frame PD array? Have we swept buy side or sell side liquidity? And do we have liquidity to target? And then it goes into our entry model, which is what I'm going to show you right now. Okay, so we have the entry model, we have the orb. So basically we have the whole structure for our trade. So I'm going to go back in with the replay tool again. And now this is when I go down to the 1 minute time frame, okay? So a lot of the time with the 15-minute orb, if we're expecting a bearish move, we're going to manipulate up first. So this whole move right here is just manipulation, trying to basically get buyers in the market so that everybody is being faked out in the longs. They're expecting a bullish move, and ultimately price wants to come back down, right? So since we knew, or we had a really good idea that this was going to be manipulation, all we're waiting for is a false breakout or a sweep of the orb high up here. So if we press play real quick, we're going to see a false breakout. Okay, so boom. This is now when I'm like, I don't think that we're going to continue long. I really think that we're going to come back down. So this is now when I am looking for an IFEG. This is when ICT concepts comes into play. So like I said before, what most people wait for is an orb breakout down here to short it. We can catch it so much earlier from the very top of the move if we know our overall market structure. So right here, I noticed that we had a 1 minute bullish fair value gap form on that move up. So all I'm doing now is waiting for us to inverse that level, so to give us the IFEG for the shorts to step in. So right now this is a 1 minute bullish fair value gap. This is also a model of mine, and I call this the GUI model. And that is basically exactly what I've showed you, where we come up and either sweep or run liquidity. We trade into a higher time frame imbalance, and then we get an inversion to the opposite side. So now I'm combining my entry model with the 15-minute orb. Okay, so where would I place my entry here? Well, I would place my entry once we actually inverse the 1 minute bullish for value gap. So we want to see it close below in a test of that 1 minute. I'm going to put my stop above the wick of the IFEG candle. And that is just the way I trade. Now, if you wanted to be safer, let's say you wanted to have maybe bigger risk because you don't trust it, you could end up keeping your stop above the highs up here, right? Just to play it safer. And ultimately, you're still targeting the same TP down here. It just would be less RR and a little bit more risk. But what I do is I use that 1 minute IFEG for my reference. I keep my stop above the wick of that IFEG. And here's what I'm targeting, right? Our key touch points. 50% of the range is my first TP. That's going to be our first touch point right here. Why is the 50% important? Because let's say price wanted to move back up. Well, we usually retrace to a 50% of a range, right, before we see continuation back up. So just in case I was wrong about us coming down to the orb low, I'm protecting myself and I'm securing profits at that 50% because that's our first key touch point level. Okay, so let's just play this real quick. Boom. So we get a close below. Right here, this candle, notice how we close below. That is our IFEG. So now I got my entry once we reacted off of this level. So that's going to be my IFEG right here. And I think I got my entry a little bit lower. So like right around there off the reaction, I kept my stop above. I think my stop was about 60 ticks. And my first TP was down here. So first TP was about 180 ticks, I think, down to here. And what I also noticed about this move is if we go to the 5 minute time frame, we created a 5 minute bullish fair value gap right here. So I knew that, okay, we do have a break of structure on the 5 minute. We have a 5 minute bullish fair value gap. So now that's basically what I told my community, what I told you guys that were in the live with me, is that once we hit that 5 minute bullish fair value gap, I'm moving my stop to break even. Okay, so I had my entry. Once we hit that 5 minute, stop went to break even. Now it's risk free. And now I'm letting it play out, right? So I'm taking a first TP at the 50%, our first key touch point. I'm looking for a second TP once we trade into our OTE. That's the 0.62 to 0.79. And if you don't know what that is, go watch my Fibonacci retracement video on YouTube. That's going to break down how to use the Fib for different strategies. So that 0.62 is where I'm looking for another TP right around this. And we also had VWAP right there. And then my full TP level is once we break the orb low. So basically, this is what happened if we play it out. Within about 8 minutes, we hit first TP, we hit second TP, we hit full TP, and I'm out of that trade. Now, what is the other thing that I could have held down for? Some people in my community, or you guys are all in my community, some people in the live session, they wanted to see London low get swept. So some people held down for London low right here at 4 a.m. That's another thing that we want to look for when it comes to the orb breakouts. We're looking for a previous session liquidity. And like I said, right, we're looking for a previous day high to get swept, and then we're looking for opposing liquidity. Well, we have our London session low down here. That's a very good full TP level for anybody that held that trade. And then we have our Asia low down here, which is where I would expect price to go after that, right? All the way down here. But what I told myself is, okay, we kind of look like we might be a little bit seek and destroy. We might be ranging since we have no news. So I'm just going to take my full TP at that orb low, and I'm going to get out. Now, while some people held, they were able to catch this move down to that London low just like that. And then we ended up kind of retracing back into the orb. Okay, so I know this might sound like a lot, but this is one of my favorite ways to trade the orb that so many people will not teach you. So many people do not know how to trade because they're purely looking for the break above in the retest. Well, if you have the bigger picture, if you can read the charts on the higher time frames, if you can understand bias as a whole, you can start to catch these trades on the fake out moves and catch it from the very top of the move all the way down. Okay, so that is one way that I like to trade the orb, and I find it to be a very profitable way to trade the orb, mixing ICT concepts with a false breakout and even with an actual breakout. Okay, so that's just kind of one example right there. So let's go back and let's look at kind of how we're typically trying to trade it, right? So typically we're waiting for, like I said before, a close above on the 1 minute time frame or the 5 minute. So if we go back to the charts, normally what I'm looking for is not the reversal, right? If I had a bullish bias today, I would have expected us to break out, and I would have used that 1 minute fair value gap as my target for the longs because it is that breakout here. We close above, we have our first fair value gap. That's where I would be targeting the longs, right? And that's typically what I'm looking for on a normal breakout move, right? Even down here, we're looking for a breakout shorts continuation. Now, that's not what I was looking for today, but typically that's what we're looking for, and I'll show you an example of that in just a second. Now, we don't just want to see a wick above or a wick below the opening range. We need to see a body close below or above. And what gives us more confirmation? Well, the 1 minute time frame is the least amount of confirmation we're going to have for a 15-minute opening range breakout, right? The 15-minute is going to be the most amount of confirmation. So if you wanted to wait for the most possible amount of confirmation for a 15-minute opening range breakout, you would wait for the next 15-minute candle to either close above or below that opening range. I don't like waiting for that because we typically miss out on the move if we do that. That's why I drop down to the 5 minute and the 1 minute time frame to find more precise entries to wait for us to break out on those time frames. Okay, so like I said below, the typical way to trade this: break above, retest, break below, retest, right? Now we can go back on our charts and we can go look for some previous examples of the orb breakout, right? Friday wasn't the best example. Friday gave us a lot of manipulation. Now we can still look at Friday's example here. I'll show you this just as an example. We ended up losing the trade on Friday, but the reason is because we saw a lot of manipulation on this day, and it was a pretty good setup. So we go to 9:30 on Friday. We do the same thing, right? We chart out our high and our low of the 15-minute orb. Boom. So that's going to be our 15-minute orb high right here. And then we're going to have our 15-minute orb low down here. So I had a very strong bullish bias going into the day on Friday. So I was looking for a 1 minute close above and a fair value gap, right? So what I really liked is that we came down. If we press play here, we came all the way down and we had a little bit of a false breakout at the lows, right? So I liked that, that we swept liquidity at the lows. Now I wanted to see the long step in. So basically all I was waiting for was for a breakout of the orb high, and I was looking for my longs. So if we keep pressing play here, so we had really good bullish order flow. So this is when I was starting to look for my long position, right? We keep pressing play. Let's see where, I don't remember exactly where I had my entry. I think it was off a 1 minute fair value gap around here. Let's see. Oh, so it was a 5 minute here. So we had a 5 minute fair value gap right here. And we had a 1 minute fair value gap as well. So this is one where it didn't work out, even though our structure was super bullish, even though we had a good setup, right? So this one ended up manipulating me out. I had a long from here, and we had obvious buy-side liquidity to target. Everything about this looks good. We had a London high, an Asia high, everything resting above. So Friday's price action was just all over the place. I looked on Instagram, and pretty much every person that I follow that trades took an L on Friday. So I didn't feel too bad about it, right? Because we see the strategy work out so much. But eventually what happened was we came down, we manipulated all the way at the bottom of the range, and then we broke out of the opening range again. And you'll see it here in just a second. It took a little while for it to actually break out. But eventually we saw us actually go. So our bias was correct on Friday. It was just terrible price action. It was so much manipulation. You guys can see how much we chopped around here. All of this sideways movement. Eventually, we'll see it finally broke out to the upside and it swept all of our buy-side liquidity. Here's the move, right? So this is the move I was looking for originally right here. And obviously, it didn't play out because of Friday's price action. But that's all a part of the game, right? When we know we have a high probability setup, we know we have a high probability trading strategy, I am going to take my A plus setups all of the time, and you have to leave that risk on the table. I know when I want to put risk on. I know when I don't want to put risk on. So when I see an A plus setup like this, and I'm really expecting the breakout, I am willing to take that loss because I've seen this trade setup work out so many times, right? That I don't care if this one loses, I move on to the next, right? And that's what we did today. We lost that trade even though our bias was correct. What's the worst thing you can do for yourself, guys, is if you have the wrong bias on a day and you start revenge trading, right? This is when psychology kind of goes into play here. You start revenge trading, trying to make back your loss. Imagine how many losses you would have taken here if you kept trying to trade this price action, right? You just got to walk away. That's what I tell myself. Okay, the orb didn't work today. I took my loss. I walk away and I come back on Monday, and then we caught a huge trade because we were patient. We didn't lose all of our money on Friday, right? That is a huge part of trading. People are always going to say, well, the orb didn't work today. The orb didn't work today. Guys, it's not 100% win rate, right? No strategy is 100% win rate. But when we have such a high probability trade setup, we're always going to take it. So you have to be willing to take those losses to be able to catch the big wins, right? So I just wanted to touch on that for a minute. I think it's a super important concept to identify, to understand. Losses aren't the end of the world. You take them, you move on. Okay, so let's go look for another previous example of the 15-minute orb. We could go to Friday's or to Thursday's example. So I'm just going to kind of go back to on the charts, and we're going to look for different examples to see if there was good setups and to see how I would have traded it, right? So looking at Thursday, we had a very strong bullish bias. Price was coming down. It was swept all of our sell side liquidity down here, basically cleared out all of the sell side. And then we had a very aggressive move up at open. Okay, so now we have a target up here. This was our Wednesday previous day high. Okay, so now we have our buy side target. How are we going to trade this one? Well, let's go back. Let's use our retracement tool here, or our rewind tool. And again, we're going to chart out the high and the low. And I hope you guys are doing this with me, charting out the high and the low of the orb, and just charting out all of these levels, just so you guys have, you can start really practicing this, right? So looking here, we have the orb high, we have the orb low, and then what are we going to do? We're going to drop down to the 1 minute time frame. Okay, so now we have the 1 minute time frame. Let's press play on it real quick. Boom, we have our breakout. Since we have such a strong bullish bias, this is where we're looking for our longs. 1 minute fair value gap that is right next to the orb. And why would you not want to take this fair value gap right here? The reason I wouldn't want to take this 1 minute fair value gap, guys, is because, first of all, we need to wait for a reaction off of our level to have confirmation for an entry. When we see price run right through this 1 minute bullish fair value gap here, there is no reason to take that entry because we saw no reaction off of that level. You're just going to get stopped out. You need to see us actually bounce from a level to have that confirmation. So we run through that one, no worries. We're retesting the orb high. We have a 1 minute fair value gap right at that orb high. Perfect. We're going to target our entry here, and we're going to see what happens. We're going to keep our stop below the 1 minute fair value gap. And then, there's obviously going to be other liquidity levels here. So if we look kind of throughout on the 1 minute time frame, if we go to the left of our charts, we want to see if we have any internal buy side. Perfect. We've got a bunch of internal highs up here. So that's kind of what you would be targeting along the way for that move. And then ultimately you would want to hold it up to that previous day high, because that is our ultimate TP level for the day. Now, this depends on what kind of trader you are. Are you more of a scalper? Can you swing trade? Do you like the more midterm trades? Now, if you're a scalper, you can just look for a 1 to 2 and you can jump out, right? Or you can use the Fibonacci and you can look for first standard deviation. Okay, that's another way that a lot of people won't teach us as well. I see it so many times where once we have our opening range breakout, price runs to the at least the first standard deviation, which is almost always going to give us a 1 to 2 RR for our trade setups. So if, let's say, there's not really good liquidity levels to target for a TP, you can use that first standard deviation as a good target. All right, so let's say you got this entry and you want to keep your stop below. And let's just kind of play it out and see how it works, right? Let's see if you would have gotten stopped or if it would have played out. Boom, right there, okay. Obviously, this is all replay, okay? So, yeah, we could cherry pick whatever we want. I'm just going back through the days to show you these actual setups. And then if you actually want to see me actually trade these live, then you can just join VIP and go trade them with me, or watch my recaps or whatever. But so many people will say, oh, you're just cherry picking, right? You're picking which one was good, which one was bad. No, we're going through all of these days of data. We're actually seeing what setups work, and we're actually trading them live, right? So we're seeing if they work out. So right there, that's a really good delivery from that breakout where you could have used the 1 minute fair value gap for an entry. So basically, retest of the 15-minute orb high, 1 minute fair value gap. We also had a 1 minute bullish order block. Boom, you could have taken that entry. Now, let's say maybe you missed out on this entry. What is the worst possible idea at this point? Is to start chasing price up here, right? Let's say you didn't get this entry and you're like, oh man, the orb's breaking out. I need to be a part of this trade. So you just start chasing. The second you see bullish momentum, you jump in. That is not good because now where is your risk going to be? You're going to have really bad risk management. Your stop loss is either going to be way too tight or it's going to be way too big. You're chasing momentum without real structure for your trade. And that's why I say combining ICT concepts with the orb breakout is so important because we have real structure and a narrative behind the trade that we're taking. We're not just loosely and blindly taking a trade because we break out of a level. We're using actual structure in the market and real concepts to identify these levels to take these trades off of, right? So that is one example right there where price would have ran to TP pretty quick. Now you could have held, right? If you had the, I'm not going to, I'll just say it. Excuse my French, but if you have the balls, right? If you have the diamond hands to be able to hold all the way through, then sure, you could have held this one for the entire day, held it all the way up to previous day high, and look where price bounces, guys, right at previous day high. Boom, perfect bounce. That's when you're out. Full TP. And let's see, this one for first TP would have given you about 471 ticks, and full TP would have given you, let's see, I think around 800 ticks, right? So yeah, about 800 ticks for a full TP. So that was Thursday's example. Right, so we could go back for hours and hours and hours and hours, and we could look at all of these trades, and that's what I recommend you do, right? If you want to have a better understanding of the strategy, go and backtest, right? Go use the replay tool on TradingView. Say, maybe even close your eyes and just rewind it so that you don't see what happened on a certain day, and then you find the 15-minute opening range, you chart out these levels, you say, okay, this is where I think I would take an entry, and then you press play and you see. Now, let's say the entry didn't work. Now you have something to work off of, okay? Say, well, okay, that entry didn't work, but why didn't it work? Maybe there was a 5-minute fair value gap below the 1 minute. Maybe I should have waited for us to retrace into the 5-minute. Why is that important, guys? Because the higher time frame, the better, right? So even though I take most of my entries off of a 1-minute time frame, if I see a 5-minute fair value gap forming, let's say, for example, I think I actually have a good example from a few days before that. Maybe on Wednesday. I don't remember the exact example, but let's say there's a 5-minute fair value gap below the 1 minute. Sometimes you want to wait for us to retrace into that 5-minute before taking that trade, right? So it depends on the aggression. And another thing I will say is, let's say you wanted to take the really aggressive entry at open or at this opening range breakout. Maybe you're scaling in with less contracts, right? Because you don't trust it completely. Maybe there's a 5-minute fair value gap below. Just in case you're going to, scale in with a lighter position. Okay, you get stopped out. Now you're going to get a re-entry once we retrace into that 5-minute, right? So that's why I'll say is a lot of traders, they'll hop on for their first trade of the day. They'll go in super heavy. They'll take a loss and they'll say, well, it's the strategy's fault. Now I can't trade for the rest of the day. Or they'll take a huge loss and then they'll start revenge trading, right? And that's not good. What I always think is probably the best way to go about it is if it's your first trade of the day and maybe you don't have 100% conviction in the trade setup, maybe you go in half of what you normally would. That way, if you do take a loss because you didn't have that 100% conviction, it's a smaller loss. Now, let's say you still catch that trade, you're still catching good profit, and you can still make some money, right? That's the way I do it. Like this morning, the trade I took, I did not go into a full position. I was in a pretty light position in the short position, but I still was able to make over $1,000 on that trade, even trading micros, because it was such a good trade setup, right? So that's something that's really important to think of when you're trading. Let me just go through the chat real quick. I'm going to look through. Thank you guys for answering any questions in the chat. But I saw a few. Can you explain how you use SMT and what you need to see confirm your bias? That's a really good question. So I want to go through that real quick. So SMT is a really key concept to keep our eye on when it comes to the 15-minute opening range breakout or false breakouts, because SMT can show us that we're having a false breakout. Now, I think I might have a pretty good example of an SMT Let me see. Let me look back and try to remember if we had a decent example of SMT with the opening range. Let's see. Let's go back and look. I don't think we had that SMT necessarily today, but there was one a few days ago that we did use that gave us some good insight. Let's see. So let's kind of go back and see if there was any SMT. So if you guys don't know what SMT is, first of all, let's just break down what SMT is in general. So basically, if we were to go, let's just look at the 15-minute time frame real quick. This is probably a pretty good example right here. Okay, so we're going to look at ES and we're going to look at NQ. Now, these are correlating markets, right? These typically move in the same direction, right? So when we see little discrepancies in price, it gives us some insight on where price wants to go in the future. So let's say we see down here. Let's say right here we see this swing low right here. Actually, this is not the best example because that was an SMT. We need to find a different SMT. So let me go through the charts for a second and see if we have a good example of a 15-minute orb breakout with SMT. Because it does give us some good insight, guys, for sure. I'm just going to kind of go through the charts, so bear with me. I'm going to look for a level where we might have had SMT. Let's go back to Wednesday, and we'll see if we did here. Okay, so we had our orb here on Wednesday. We're going to go all the way back to the orb on ES. So basically, what you're looking for SMT. I know a lot of you probably already know what SMT is, but some of you might not know. So you basically want to see, let's say we're looking for a bearish move. You want to see NQ sweep a high and ES fail to sweep that same high for a reversal, right? So let's see if we can find one here. I'm going to go down to the 1 minute time frame. We're going to look here. So we have this level right here. Let's play out on NQ real quick and see if we had any kind of SMT here. I'm just going to play it out a little bit. Playing it out. Again, I don't remember if we had SMT on this day or not, so I'm just trying to find an actual example for you. Boom, boom, boom. Okay, so we're going through. All right, so we're looking here. Nah, probably not the best example. You said there's SMT on Friday. Okay, let's look here. So, yeah, we do have SMT at the highs, actually. You're right. So this isn't exactly with the orb breakout, but actually it will play in. So yes, there is SMT. Perfect. So up here, look at ES. Boom. Right there we have that little wick above. And I'm pretty sure that was our data high. Yeah, so that was our data high right there. So whenever there's data coming out, we're going to form usually a pretty big wick on both sides. So right there is our data high. NQ comes up and takes out. It runs the data high, right? So we run that liquidity above right here. And look at how ES fails to run that same data high. So that is going to be our first indication of a reversal. Now let's have the 15-minute orb charted out. Let's look at the orb high, which is going to be before that, right here. All right, so that's our orb high up here. So this is going to be a false breakout above, and then we're going to have our orb high down below, which I believe is all the way down here. Okay, so a pretty big orb range here. So we have our SMT right here. NQ runs up. Boom, right there. NQ grabs our data high. So that's going to be SMT divergence. That's going to be a fake out there on NQ. ES right here. Boom, SMT. So we fake out there. So ES fails to sweep the high, NQ sweeps the high. I got 952 on the orb. Let's see. Oh, you're right. You are so right. Orb high is going to be over here. Thank you for correcting me. Okay, so orb high is over here at 938. You are correct. Usually I'm charting it out on the 15-minute, which makes it a little bit easier. Okay, so now we have the false breakout right up here. So how are we looking to short this move back down, right? If we are looking for a move back down, we know that we have SMT. This is giving us our first indication of a reversal. Right here, ES completely fails to run that liquidity, completely fails to take out the data high, and then we see a strong displacement move, aggressive move back down. So right here at this low, that's when we really know we're heading down, right? That's our displacement, because we form a swing low, we retrace, and then boom, we get a strong close below. So now we're starting to look for an entry. Now let's see if we're actually going to have any decent entry levels here that we could have targeted a short off of. If I can, All right, so now there is one way you could have traded this. If you were going to be super, 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 super aggressive, the very first entry you could have taken was this 1 minute IFEG, right? Boom, right here, 1 minute bearish IFEG, and look at that. So now you're using SMT in confluence with the IFEG, with the false breakout. You're keeping your stop above, and then what are you doing? First of all, you're using your Fibonacci retracement tool from the high to the low of the orb right here, and you're going to target the 50% of the orb as a good first TP level or even a full TP, and then you're going to target the orb low for your full TP, or if you wanted to hold it all day expecting a bearish breakout, you're going to hold it for the rest of the day. So let's say you did get that super aggressive entry right there. Let's say you really expected it. That's kind of like today's trade. We just didn't have SMT today. But let's just see if this would have played out if you took that entry, right? So boom, there's first TP, okay? So we run all the way down to first TP pretty quick. Another entry you could have waited for here is now that we're back into the orb and we break structure right here, you're waiting for retracement into a 1 minute fair value gap, right? And you see this retracement to this 1 minute. So you also could have taken this entry right here out of that 1 minute fair value gap if you wanted to, because now we're into silver bullet hour. This is when we can use 1 minute fair value gaps as more confluence. Boom. Okay, so let's just say you got that first TP. Even if you ended up taking this trade and you waited for that break of structure, you were a little bit more conservative, you still could have caught 300 plus ticks for a first TP. All right, so now let's keep playing it out, and let's see if this one would have kept going down. All right, we're still holding structure. Look at that bearish structure, and boom, just like that, you could have taken a full TP. So it's the same exact concept that we used today for our trade, pretty much to a T, right? It's almost the same exact thing that happened today that happened during this. Another reason, right? Well, let's just break it down, right? So again, this is how you use SMT in confluence with the orb, with a reversal move. You see a fake move, you see a run on liquidity, you know this is going to be a false breakout if you have a bearish bias, right? So you're just waiting for us to inverse the first 1 minute for value gap, just like we did today. You're using that as your target, and then you're looking to take it back to 50% or to this liquidity, and then all the way down to the orb low, where you could take a full TP. Now let's look and see if there was more liquidity on sell side that price might want to target. Well, look at all the way down here, we have our Asia low, our London low. So there's still a reason that price could continue bearish on this move, right? So you could have held that trade. Now let's say maybe you missed out on this initial move. How are we going to catch the actual or breakout here, right? From down at the lows. Let's see if there's a way that you could have caught the actual or breakout. I don't remember if there was or not, so this is really just kind of blindly looking at it. But right here we have the close below on the 1 minute time frame. So what's the most aggressive possible trade you could take with a orb breakout, guys? Is the second we close below the orb, you jump in, right? That's the most aggressive possible way to trade the orb. A little bit less aggressive, you wait for the close, you wait for the retest, and then you get your entry. A little bit less aggressive is waiting for a fair value gap, right? So there's levels to it. The most aggressive way possible to trade it is the second we break through that orb, you jump into your trade. You sometimes don't even have to wait for a close below or a close above. I prefer not to trade that way because we need more confirmation, but that is one way. So you could have done that. That's not the way I trade it. That's the way some people trade it. What I would be doing is waiting for some kind of fair value gap on the 5 minute, the 1 minute, something that gives me more conviction to take this trade. So let's just kind of play it out and see if there was any entry levels here. Okay, boom, perfect. So this is kind of the trade that I probably would look for if I missed out on that first opportunity. We trade into a 1 minute fair value gap here. So you could have taken this entry right here, or maybe you waited for us to trade into that 1 minute fair value gap to take your entry. Either one I think is valid. But if you, again, you're waiting for a reaction off that level, right? So right here, we don't react off this level until we trade into that 1 minute above. So I wouldn't have taken that entry anyways until we get that delivery down. So I would have gotten my entry off of this candle right here, the aggressive move down. And I probably, to be safe, you would want to keep your stop at least above VWAP or above that high. That's way too much risk for me. So I'd probably just keep my stop at that recent high right there, around 70 ticks or so, right? And there's no 5 minute fair value gap around here. So let's just see if this one would have played out, right? Again, I don't really remember how this plays out, if it would have worked. So that one wouldn't have worked, okay? So let's just keep playing it out and see, right? So why is this probably a little bit lower probability? Well, if you see, once we come down to the orb low, right, we're sweeping a lot of sell side liquidity. And what are we also doing? we're trading into a 15-minute order block, a 15-minute fair value gap, right? We're trading into some higher time frame levels, a 1 hour bullish order block, a 1 hour bullish fair value gap down here. So that makes it a little bit less probability to take that breakout, which is why I'm saying the best possible way to trade this would be from up here, catch it from the very top, right? So again, this one, like I said, if you want it to be safe with the orb, you would want to keep your stop above the wick of this fair value gap. Now, it just depends on what entry you get. For me, if I got an entry all the way down here, I don't know if I would want to keep a stop at 233 ticks, right? It makes it a little bit more difficult. But let's say maybe you waited for us to retrace. Maybe you got a little bit better of an entry. Then you could have a little bit better of a stop loss up above. Either way, we're going to see that this one does end up, seeing some good delivery down to sell side. If we just kind of keep playing this out, right? It eventually comes down and takes out a lot of our sell side levels down here, right? It kind of goes into more of a range, but you guys can kind of see the point, right? So even if you took this entry, we continue to hold the orb, and even if we look at, let's say, the 5 minute, what I like about the 5 minute is that we created this 5 minute bearish order block, so you could have even waited for the order block to be generated. There's so many different ways to trade it, right? You could have waited for us to break out here and taken this 5 minute bearish fair value gap entry, right? So there's a numerous amount of ways to trade it. But the way that I think is the best is to catch it from the very top to the bottom or the bottom to the top. And if we don't have that type of move, then we're looking for the actual breakout and retest, which to me sometimes isn't as high of probability of a setup, just depending on how it looks. But yeah, that's just kind of going through how to use SMT. I know I kind of ranted a little bit through some different ideas, but that's how I would use bearish SMT or bullish SMT in confluence with taking the orb. Preferably it's on the reversal, right? So you're using it to reverse the orb from the high to the low or the low to the high. But great question. Great question. If price goes into the bias, then it's normal orb entry. Yes, 100% correct, right? So if we are trading with our bias already, let's say pre-market, we've already swept, let's say we're bullish, right? Pre-market, we've already swept all of our lows. We're seeing a really strong breakout. Our bias is bullish. Then we're just taking the normal orb breakout trade, right? That's when we're just looking to take the long, the breakout, the retest, that idea. But if our bias was bearish, let's say, or again, actually, let's talk about this, right? So let's say if it still was bullish and you could still catch it, right? So you could still catch it normally if there's a setup, right? If you have a bullish bias and let's say price gives us a manipulation down, you could still catch it from the bottom up. But let's say we don't ever get that manipulation move down. And I think we could actually probably see it on I think maybe Thursdays when we saw this move. I think we already went over it. But yeah, like this one right here, remember, we never got the manipulation back down. If we look at this time frame, so like right here, this would have been a much harder trade to catch from the bottom, right? Because we never swept liquidity down here. We never came down and gave us a real reason to get in from the bottom of the orb. We didn't really have any IFEGs. There was nothing that we could have taken a GUI model off of. That's when we have to wait for the orb breakout up here to take the longs, right? Yeah, that is just a straight orb trade right there, 100%. Yep, and today was a GUI model. Yeah, so, yeah, that's exactly. Yes, so GUI model combined with SMT. So the bias of ES is what you go with. So, okay, you already answered that. Yeah, so it's not really the bias of ES, right? It's just using ES and confluence. When ES and NQ move in different levels, you're going to see little discrepancies in price that give us that insight. All right, so any more questions that you guys have for me at the moment? We'll just kind of continue through. Obviously, I'm open to any questions. You guys let me know. I'm going to answer as much as I can. I know I'm just trying to go through everything that I can think of any possible way that I trade the orb so that I'm not leaving out anything for you guys. Now, obviously, I'm probably going to forget some things here and there. There's going to be things I leave out just because there's so much going on in my mind trying to cover everything. But the cool thing is I have the YouTube video already on for free on YouTube, so if you want to go watch that video. Also, I live trade this every single day, right? So if you want to join VIP, just come live trade it with me and ask me questions in real time, and that's another way for you to learn. Yes, so J Money, the GUI model is my personal entry model that I came up with off of basically my history of trading ICT concepts and what I found to be the highest probability entry model in the market. I also have a YouTube video for that. But basically what it is what I was talking about with this entry. So let's go back real quick and I'll just show you what the GUI model is. So the GUI model is basically a fake out move. So you're going to be looking for a liquidity sweep like this one. And what we want to see happen during this liquidity sweep is a move into a 5-minute, a 15-minute, an hourly, a 4-hour, basically a 5-minute or above a fair value gap, right? So up here, we want to see a bearish fair value gap that price taps into once we're sweeping that liquidity. And for our entry, we're looking for a 1-minute fair value gap, a bullish one, that forms on this move up to sweep the liquidity. Once we inverse that 1-minute bullish fair value gap, that's our trigger for our entry, and we're taking the reversal trade. So the GUI model is really good for reversal trades, but it's also good to catch continuations because a lot of the time you see price breaking out and you don't get a piece of it because there's so much momentum. What you have to wait for is a pullback to sweep liquidity into a fair value gap to be able to catch that next expansion move. Now, again, that's a quick kind of breakdown of it. But if you go into my YouTube also, there is a full video on YouTube of how to trade the GUI model. It's also something that I trade almost every single day. So I basically like to use the GUI model in confluence with the orb. When I'm not trading that opening range, when I'm trading later in the day, I'm typically using the GUI model for any entries. Let's see. You did some back testing and notice the pullback into the fair value gap was about 2 hours away from the original orb. On which one are you specifically talking about? If you could give me the time frame, I can go and check it out. All right. So one thing I did in terms of just kind of going back, and what I do consistently is I go back and back test. Right. So let's say I'm done with the week of trading. I'll go back and I'll look at every single 15-minute orb from the week. Ones I didn't trade, ones I did trade, and I'll see, okay, how did this one work out? What trades did I take? Did this one work? Did this one not work? That way I have more data. I have a better understanding of if my strategy is playing out, why is it not playing out, how can I improve on it? And that's how we become profitable traders, right? You need to have that data, and you need to consistently build on your strategy and refine it, right? And that is one very important thing. I mean, like that's one of the most important things, obviously, is our strategy. How do we use our strategy? But I will say, no matter what strategy you use, if you don't have your emotions in check, if you don't have a good risk management plan, the strategy does not matter. So I will have people come to me in my DMs and they'll say, I tried this 15-minute orb for, a certain amount of time and it didn't work. Okay, well, why didn't it work? Give me more than that, right? Because it works for me. So there's a specific reason it's not working for you. And one of them is probably psychology. You're probably chasing trades, right? You're probably over leveraging, all that crazy stuff, right? Revenge trading, the stuff that holds us back. Or your risk management isn't working, or you just don't know how to trade the orb. And that's why I wanted to do this, because I wanted to clear up anything that you guys might be confused about on how to trade the strategy. Okay, so I don't mess with Forex at all. I don't trade Forex, and I don't know which pairs this actually would work on in terms of Forex, because I've never traded Forex. I've never messed around with it. But again, if you want to use it on a Forex pair, and that's what you trade, then you can just go back and back test. But you need to do a lot of back testing, right? You can't just look at one day and then be like, well, this doesn't work. You got to look back on so many different days, like weeks to months, right? To give you an understanding of if it works on that specific pair or index or whatever you're trading. Can you trade the orb later in the day when the move already happened? Really good question. So you can still use the orb as confluence, right? Because it's still a very key level to be looking at your trades, right? So I still do, yes. I will still look at the 15-minute orb throughout the day. Like, let's look at today. I know there's so much going on the charts here. I'm going to try to delete some stuff here just to kind of clear it up a little bit. There's a lot going on. So let's look at today's orb, right? We can still look for a retest of the orb low. We could still bounce off the retest. But what I'm usually looking for at this point in the day, if I want to see continuation down to sell side here, right? Let's say I want to see us come down and trade into this daily bullish fair value gap here. I'm just looking at the 50% of this overall range, typically, right, for a retracement. So usually I'm looking for 50% retracement right here at VWAP into a PD array in the premium. And then that's when I'm looking for the move back down. But let's say price keeps running. Now you're looking at that 15-minute orb low as a possible retest point, right? So yes, you can still use the orb that when it's not in like the first 15, 30 minutes to hour of the day, right? You can still use it. Okay, so how about trading the orb for another session like Asia or London? So I've heard, I don't trade London ever because I'm always asleep during that time. I've had people tell me that it does work for London Open. So I think it's something to definitely test out. It's something to look into. But I can't tell you myself because I personally have never traded it during London because I'm never awake at that time. I haven't back tested it for London either, but it's definitely something to look at, right? Do your research, do your back testing. If you find that it's consistent with London Open, awesome. I've had people come and tell me that it does work, but that's just their word. I don't know if, how consistent it is. I don't know if that's true. So you could definitely look for that. Yeah, I mean, great questions, guys. Would love, keep them coming. Let's see. Can you enter on the orb strat without an actual orb breakout? That is a great question. Yes. Okay. Fantastic question. I want to, I have an example of that actually from recently. There's a trade I took, I think it might have been last week, where I took an orb trade before we ended up breaking out. So yes, there 100%. There is a way to do that, and it can be riskier. But again, it all goes back to your higher time frame bias. What is our draw on liquidity? Do we have a real reason to take the trade before the orb actually breaks out? And I'm trying to think of when this was. This might be it up here, actually. I think it's actually from last Monday. Yes, okay. So I think this is actually the example of a trade that we took on Monday. So let's go to Monday. We're going to look for our orb. So our orb low is going to be here at 9:30. Right here. So this is Monday on the 21st. And this is a trade. I'm pretty sure we took this trade. I know we made money on Monday, so I'm pretty sure this is the trade we took. My memory sometimes is not the best. Okay, so let's see. We're going to use our replay tool here. We're going to go all the way back to the 1 minute. Yes, we definitely took this trade. Okay, I'm pretty sure. So this is where we use the fib from the orb low to the high. Okay, we had a bearish bias going into the day. And I don't remember where we took this one to, where our TP levels were. We'll worry about that later. I'm just going to kind of go through how I took this trade. So I'm pretty sure we used an IFEG before we broke out on this Monday. Yes, okay, here it is. Perfect. This is the trade we took. So look at how perfect this setup is here. So we had our opening range. Look at the perfect retracement. So this is the first level you could have looked for a trade for if you wanted to wait, if you didn't want to wait for a breakout. Right above the 50%, we have a 1 minute fair value gap. So if you had a really strong bias to sell side, the 50% is that first touch point, right? So that 1 minute fair value gap could have been your first entry level. You could have targeted shorts from there. We haven't broken out yet. What I do for extra confirmation is right here. Notice how we have a 1 minute bullish fair value gap. Boom. This is before we break out. We inverse it right here. So now we have a 1 minute IFEG. We haven't broken out yet, but I know that I took this trade, and I'm just trying to remember where I got my entry. So anyways, we have the IFEG. I must have taken a really aggressive entry on this one because I do remember taking this trade, but I must have not waited for a retracement. So I think I probably took a super aggressive entry here as we were trading through the 1 minute fair value gap. If anybody was in that live and remembers, let me know what trade I took. I'll have to go back and look. But yeah, so this is another way you can trade the orb before we break out. Notice how we touch point the 50%. So you could either take this entry here with a strong bearish bias once we retrace to 50% and have a 1 minute bearish fair value gap, or you could have waited for us to run through this 1 minute bullish fair value gap and taken that entry, and then boom, you're catching the orb breakout down to first standard deviation just like this, and just like that, right? So that is another way that you can trade. You don't always have to wait for us to break out if you're catching the move in the direction, right? So this is one where you wouldn't be looking for a false breakout up here because we never got the false breakout. You're looking now for the 50% level for us to react off that level, and then you're looking for the IFEG here as your entry level to target the shorts, okay? So yeah, hopefully that answers your question. There is ways to trade it that I do trade that we haven't even broken out of the orb yet, and that's just combining our ICT concepts and our overall daily bias, right? Okay, looking through. Let's see. Yeah, awesome, Paige. You definitely go back and, yeah, I mean, it's worth backtesting for sure. Whatever indice you trade, I just find for my trading, It works great with NQ at New York Open. That's what I trade. That's my edge. That's what works for me. But yeah, whatever you trade, you can go through, look at it, see if it works for you. Okay, I'm going to try to translate this real quick. Again, I'm on like 200 days of translate, and I still struggle sometimes with reading in Spanish. Let me see. Did it work today? See. Yes, it did. It did. Sandra, it did work today. I see you said, did it work today, or are you still waiting for it? Yes, it did work today. We took the opening range breakout this morning. So we took it. I went through it this in the start of this webinar. So I'm recording this whole thing for you. I'm going to post it after on my YouTube for free for you guys. So if you want to go back, if you missed out on anything, maybe you missed the start of the session or you had to miss the end of the session, whatever it is, you can go back and go through all of... I went through everything, so yeah. No problem. Let me see. Just kind of reading through. Yes, AZ, thank you for saying that. Yes, I mean, that's what it's all about. I mean, again, the community here is, we're helping each other level up, right? You might know a strategy. Maybe you know the 15-minute orb. Maybe you know ICT concepts, but you don't really know how to actually put it into place and have the confidence to take the entries. That's what the community is about, right? I'm not only teaching you the strategy, but I'm teaching you how to deal with the actual trading part of it, which is the hardest part. How do we deal with our emotions? How do we deal with our risk management? And how do we scale our trading so that even if you know a strategy, it's still hard to be able to become profitable without actually knowing how to deal with yourself as a trader and how to take the most precise entries and where to take exits, all of that good stuff. So that's what we're all about. Okay, so about later in the day, trading the orb, what do we look for when we want to try entering the orb lows, for example, like today? Yes, I like that. And dude, look at, he's on it already. He's on it. So yes, exactly. You're looking for ICT concepts, right? You're looking for these different models. And one model that I trade is the London close reversal. So what happens a lot of the time around lunch hour, around 11:30 to lunch hour, is we see a reversal. So right here, it took a little bit longer for this one to reverse today. But notice how we had this big expansion move down. We use the fib from the high of the morning to the low of the morning. We look for a retracement back to the 50% of the range, up to the premium of this range, and then we look to short it back down. That's basically what the model is, right? It's a 50% retracement after our morning expansion. And what you can do is, let's say we do retrace up to the orb right here. That's another confirmation. If we bounce from the orb, that's another good reason to look for a trade. Right? So you're just using it in confluence with ICT concepts. So hopefully that makes sense. Again, guys, any more questions you have for me? I've pretty much gone through everything I think I wanted to go through in terms of just lessons and how to trade and all the different concepts. But if there's still things you're confused about, again, feel free to shoot them over to me. Yes, sir, it is recorded. I will be posting this for you right after. And also, guys, I'm posting, I think I just posted, it should be uploaded now, the trading session from this morning for free on my YouTube. So if you want to go watch that as well, you can see how I traded it, where I executed, where I exited my trade. So yeah, go watch that, and then I'll post this as well. So now you'll have those two videos, and then go watch my original 15-minute orb YouTube video, and you guys will be set, at least on the knowledge, right, and the information on how to trade the 15-minute orb. Yes, Bryce, exactly, bro, right? The 15-minute orb sitting exactly at the 61.8 retracement. That's perfect. That just adds more confluence to that being a key reversal point back down. At what times do you go live for VIP? Yes, great question. So I go live every single morning at 9:15 a.m. Eastern time, right? So I do pre-market for the first 15 minutes, and then we look for our trades at market open. On Tuesdays and Thursdays, I also run an afternoon session, so I trade at 2 p.m. Eastern time on Tuesdays and Thursdays. And then Shosky is our other live trader. He trades live on Monday afternoons for Power Hour. He also trades live on Wednesday afternoons for Power Hour and sometimes on Fridays for Power Hour. And then he'll run some charting sessions, some pre-market analysis sessions throughout the week as well. So we've got you covered for the entire week. I trade 5 days a week. And yeah, so again, I'm always on. I also run Asia sessions here and there, live trading or charting, education, all that good stuff. Ty, what's up, dude? Over traded day in and day out until I found this community. Man, that's awesome. I really appreciate you, man. Yeah, I mean, that's what it's all about, dude. Like, we take this very seriously. We are professionals, right? But it's also good to relax. You got to calm down. That's why we listen to music. We have a good time. We get to know each other. Because if you are doing this on your own, you're going to be glued to your computer screen. You're going to be forcing trades. You're going to be revenge trading. And it's just not good for your mentality, for your mental health. It's not good for your trading. What happens in a community is we hold each other accountable. You guys get to watch how I stay patient, wait for A+ setups, right? Wait for real trades. And while we're not, what most traders do is they trade 90% of the time and they wait 10% of the time. What real professional traders do is they wait 90% of the time and they take trades 10% of the time, right? And that's what we do. A lot of it is waiting around because we need the market to show us the best possible setup to give us a high probability entry. So that's what it's all about. That's what we do. Power hour is the last hour of the day. So it's 3 to 4 p.m. Eastern. And the reason they call it power hour, well, there might be a different reason, but most of the time during power hour, it's just super volatile. A lot of our institutions are dumping their orders into the market. So we see a crazy move or just very volatile price action for the last hour. Yeah, for sure. What about equal highs that were left on the 50% of the orb before taking the shorts? Are you not worried about equal highs, lows when entering? Okay, yeah. So, I mean, that's a good point, right? So that's when we have to look through what else is going on around that area. What else is happening in this area? So, yeah, I mean, that is one that this probably would have been a hard orb to catch down here because of that reason, right? It would have been a little bit harder to catch that trade because of those equal highs. You would sometimes be waiting for us to come back for those equal highs right there. But notice what happens right here. Let's look closer. I guess we do have barely equal highs, huh? So we don't sweep that. So yeah, I mean, that makes it harder for sure, right? And I probably wouldn't have, I wasn't trading once we got to this point anyways. But that makes it a little bit harder to take that trade. So that's when you got to look for more of the picture, right? So obviously, okay, probably don't want to take that. But if we get such a strong breakout like this right here, we're not really expecting us to go back for those equal highs anytime soon, right? If we know that we have a bunch of momentum, we have Asia low sitting below, we're expecting that breakout to go and run, and we can come back for equal highs later. Like right now, maybe we do want to run all the way for equal highs. I don't think that's the craziest idea. I don't expect that to happen, but let's say we inverse this 15-minute bearish for value gap right here. We might see that happen. We might run for equal highs, right? So it's good to keep those in mind. But when you have such strong conviction and you see such a strong breakout like this one right here, right, or like this one right here, a lot of the time, we're less likely to go back for those highs. But like, I wouldn't have traded this right here. There's no way. And I was even still live when this was happening. There's no way I was touching this price action because look, there's a lot of manipulation. There's a lot of fake outs, equal highs, like you said, all that stuff. I wouldn't have touched this, right? That's not something I would have wanted to trade until we see a clean breakout. Boom, right here. Look at this strong displacement, retracement into a 1 minute for value gap, and then that follow through. That's when you want to look for those trades. You don't want to trade it while we're just moving sideways. You want to wait for the strong displacement and then the retracement. Shosky, no trades yet today. You're running power hour, right? Let's see if maybe there's a setup there. Let's see, where can I find this recording? It will be posted on my YouTube, and I'll send it to the free chat right after this. It's going to take a little bit to upload, but yeah, I'll send it to the free chat room. You'll get the link to my YouTube, and you can go back and watch it. Yes, Shosky will be running Power Hour here. I think I'm going to end this webinar right now, guys. I do really appreciate you being here. You guys are awesome. Again, I hope you gained a lot of value from the session today. I hope I was able to break it down for you in a way maybe you haven't heard it before. Give you some more insight on how to trade this. And if you want detailed breakdowns of how to trade this every single day, then just join VIP and trade with us every day. And before you know it, you'll be trading this like a master. So yeah, I mean, that's all I have for you guys. If you have any questions for me, always feel free to shoot over a DM, shoot out into the chat room. We have so many helpful people in this community, people that are always willing to answer your questions, even if I'm not around. Other people will be right there to pick you up. Of course, guys, I got you. We're here for you, man. Let's make some money and let's be consistent and do it the right way. All right, we're not here to gamble. We're here to do it the right way. Take high probability trades, trade consistent strategies, take care of our emotions. Before you know it, good things will happen. You're welcome, guys. Appreciate you all being here. With that, I'm going to end. And yeah, I'll see you guys all very soon. God bless every one of you. Have a great rest of your day. Stay safe. And as always, trade good. Peace out, my friends. Peace out.